Even if you are a beginner in ICT, you can still be profitable with this model that I'm going to show. First of all, you need to find a consolidation. You can find this model when the price is consolidating. You can find this model in other market conditions like when it's bullish or bearish, but in that case you need to know the bias and draw on liquidity, and that wouldn't be a beginner model anymore in that case. So first you should look for your consolidations. For example, we have a consolidation here from the beginning of this month to here to current day. After you found your consolidation range, you should use your Fibonacci, draw it from the bottom of the range to the top of the range, from the low to high of the swing in the consolidation. That's your consolidation range, your dealing range. And in the next step, you should go in lower time frames. When price is consolidating, price moves from premium to discount and discount to premium. So that's your draw on liquidity. If you are in premium, your draw on liquidity is discount. If you are in discount, your draw on liquidity is premium. So knowing that, you know your TP, your take profit, your draw on liquidity. So now about the model. You should look for failure swings or breakers in discount targeting premium, and also bearish failure swings and breakers in premium and targeting discount. So now this is the equilibrium, and this is the top of the range and this is the end of the range. In discount there is this failure swing and price went all the way up to the premium, and there was this breaker and price expanded down to discount, touching this CB under equilibrium. And if you go in 1 hour chart, in even lower time frames, you can find more trades. You should always use the time and price together. So for example, if price is 9 a.m., you want to see the 9 a.m. take some sort of liquidity as it's Judas, creating a breaker, or just going to discount or premium like a failure swing, and then expand up to premium or discount to your target. So for example, here there is this breaker here, price is in equilibrium, and the expansion up takes this liquidity, it's in premium, it's at 12 p.m. session, and it's taking the liquidity of 9 a.m. So just like the mentor said, PM session will take the liquidity of AM session, and this is what's happening here in premium. We can feel confident taking short here, targeting discount. The next level of the discount is this level here. There is this BC here and there is this liquidity. So price expands down, takes this liquidity, and this is also the 4 hour failure swing. And here there is another breaker in 1 hour, price expands down and takes the Asian session sell side liquidity in discount under this level at 3 a.m. London session, and price expands up in London session in premium and takes the liquidity of PM session. You can always see this happening in consolidations. So for your entry and a stop loss, it's very easy. You can either enter after the liquidity has been taken, or you can enter lower time frames and find a PDA and enter with that. So for example, in this breaker, so for your stop loss, put your Fibonacci from the top of the expansion to your target. You enter the trade after the liquidity has been taken. So for example, you enter trade here, and for your stop loss, after you put your Fibonacci from the top to your target, you put your stop loss on 25% of the Fibonacci, and your target will be equilibrium. So let me remove this Fibonacci. The equilibrium is here, so you will target equilibrium. And you can also look for PDA metrics above the equilibrium, like this CB here or this liquidity. But don't forget to take partials. Take partials here, take partials here, take partials above it. Another way that you can also enter this is by going in lower time frames. So the 1 hour breaker was here, and you can also see there is this breaker here going down, and there is this breaker here in 5 minutes. So the more you go in lower time frames, the more breakers you can find. You can find this model in all time frames. Like if it's a monthly consolidation, you can find breakers in daily. If it's a daily, you can find breakers in hourly and minutely, in all time frames. So in the 5 minute chart, you wait for the price to take the liquidity, and then you wait for it to expand back up. You want it to go through premium and respect discount. For example, there is this fair value gap here in the form of CB. When price expands up here, goes through it, and it starts respecting this CB fair value gap, invasion fair value gap, it doesn't go under it and it easily went through it. So you can also enter long here. You can put your stop loss behind this breaker block or this fair value gap, but you might get a stop out here. You can also put your stop loss behind this expansion because there is this imbalance here that price might want to come down here and touch it. So it's a safe place. And again, you target premium. This is a 1 hour breaker after all, so your target will be much higher. You can target all the way up here, but take partials here and here. So it's a very good trade with a high risk reward ratio. So in this 4-hour breaker, if you enter after the liquidity is taken and put your stop loss behind the 25% of the Fibonacci that I have mentioned, you will get a stop out. And as you can see, price did come all the way up here to 25% of this Fibonacci, and that's where your stop loss is supposed to be. You get a stop out. So sometimes that doesn't work. But if you come in lower time frames, you can see this breaker here in 5 minutes. It happened in 10 a.m. At 10 a.m., just like Mentor said, it can be reversals targeting 9 a.m. liquidity pools. You should enter trade using the time. You should enter the trade using the time. So let's say you entered here, that will be a really big risk reward ratio. Or you can wait for the price to go through discount and respect premium. So there is this 5 minute fair value gap in the form of BC. Price goes through it and price starts respecting it. There are wicks that are above it, so you enter trade here at the fair value gap. You put your stop loss above the order block or the breaker block. If your stop loss was above the invasion fair value gap, you would get a stop out. And for your target, it's a 4-hour breaker and you are deep in premium at top of the range, so you can target the equilibrium. You need to look for PDA matrix. Let's go in lower time frames. There is this fair value gap here, there is this liquidity here, and there is also this fair value gap here. So we will take partials at this liquidity pool and in this fair value gap under equilibrium. All of them are good targets. Your risk reward ratio is pretty good too. Ask me any questions you have about this model in the comment section and tell me your experience. If you like this video, subscribe. There will be more videos like this very soon.